Hi, everyone. This is Elizabeth Kish, and on behalf of the Financial Security for All community affiliated with eXtension, welcome to our August webinar, and it's back to school time, so a great time to talk about student loans. And today we'll be talking about a series of student loan fact sheets, which are a new eXtension resource for financial educators. And we have three presenters today. Carrie Johnson, who is now at North Dakota State University, Barbara O'Neill from Rutgers University, and Melissa Leiden Welsh from the University of Maryland. And they will take it away.
Thank you, Elizabeth. So for the webinar today, we're going to start with a little bit of background information on kind of why we decided to develop these fact sheets. And to start with that, we're going to go through some of the current trends in student loan use. So a lot of you have probably heard in the news about student loan debt. So the first few slides I'm going to go through, we're going to give you a little bit of a background on why it's important to look at this and why it's important to educate individuals as well as extension staff and giving them some resources that they can use with people that they work with. So here's something that I feel quite often a lot of times. I was lucky enough to be able to get an education, and of course I do want to say die to my student loans. I can't wait until they're paid off, although it is going to be the year my daughter starts college, so I'll probably have to take out some more loans, but that's another issue. But so we look at them as, I'm so glad that they had, that I had student loans while I went to school, but I also cannot wait until they're paid off. Just some background on debt by type in a decade from 2003 to 2013. So mortgage debt is still quite high. It's still the highest debt out there. But student loans have actually overtaken credit card debt in American society in our consumer spending. Credit card debt is still large, and then followed by auto loans, home equity lines of credit, and then other types of debt. So as you can see, student loans is starting to outpace other types of debt. The number of students enrolled in post-secondary institutions annually, so it definitely increased throughout the years, and then now has started to taper off a little bit and starting to decline. So the percentage of those undergraduate students who actually take out federal student loans, now remember these are only federal student loans, not private loans, and we'll kind of get into that in a little bit, the difference between the two of them. But it is over 40%. It was in 2011, 2012. Now these charts are a little older, but as you can see, the percentage may not be that high, but when we look at the total debt, it is extremely high. The average amount received by each of those students kind of stayed the same. 2009 to 2010 was a very large year, so this is that average amount of loans received. Now, looking at the status of federal student loans, this is when students leave school. Either they drop below half-time, drop out, graduate. So it may not be that they're all repaying. So those outstanding student loans, 61% of them are in repayment. 30% are receiving either a deferment or a forbearance. 7% are in default, and 1% other. I'm not sure what the other is. But as you can see, even those students or borrowers who should be in repayment are not actually making any payments on their loans at this point in time. Only 61%. To kind of give you another idea of what we're looking at I just wanted to give you a quick rundown of the different types of repayment options. Now, once we look at the fact sheets, you'll see that we do go into this a little more in depth. But to show you where some of that confusion is, borrowers who have graduated may not even fully understand that they have the option to choose a different repayment plan. So there are the traditional repayment plans, and I'm not going to go through these that closely. I just wanted to give you an idea of where some of that confusion may be. So those are the traditional repayment plans. Now we get into income-driven repayment plans. There are the income-based, the new income-based repayment plans. So as you can see, it might get a little confusing. Income contingent income sensitive. And then the newest two plans are the pay as you earn and the revised pay as you earn. So again, it really goes to show you there are options out there for those individuals who may not be able to afford a standard repayment plan, but it can get really confusing as to which plan should I choose, why should I choose one over the other. And this, again, we talked a little bit about default. 7% of loans, federal loans overall, are in default. And this just kind of shows you by sector, if they're private for-profit schools, private nonprofit, or public schools. That gives you the percent of borrowers and the percent of defaulters. Now we're going to go over to Missy to show the student loan impacts.
You're muted, Missy. So, yeah, you're on mute. If you, the lower left-hand corner, you should see a mute button. You can click there. Okay, hang on a second. I might be able to. Okay, how about now? No, we're not getting any audio there. Yeah, Carrie, I don't know if we want to maybe see if have Missy leave and then rejoin the webinar.
Okay. Did you want me to continue with the presentation since we can't hear Missy?
I think so. Yeah.
Okay. Let me go ahead and share my screen again. Sorry about that, everybody. Let me. Okay, should be back to my screen, correct?
Yep.
Okay. All right, so I'll just go ahead and continue, and when Missy comes back, we will let her chime in. We apologize for that. So next we want to kind of talk about the student loan impacts, how it impacts possibly careers, homeownership, long-term wealth, and those impacts on society. So why is this really important for Extension to study? Why do we care about student loans, student loan debt? So to start, some of those borrowers, they might select public sector jobs to qualify for loan forgiveness. There is the Public Service Loan Forgiveness Program, and that is something that is discussed in the fact sheets as well. Students might select a stressful, high-paying job just to earn more money to repay their debt faster. And they might decide to attend graduate school to boost their income earning potential. And I've even heard of some students who will decide to go to graduate school because then they don't have to start repaying on their student loans. So then they're taking out more debt as they go. So they may not be able to get into a career where they have their degree in just so they can make more money. Missy, are you back?
I'm here if you can hear me.
Okay. Yep. I can go ahead and just go through your screens if you want to take over.
Sure. So you wrapped up career decisions?
Yes.
On entrepreneurship, for entrepreneurship, getting the needed capital for small business loans by individuals with high student debt becomes quite challenging, if it's not impossible, for some individuals because of that debt to income ratio level. And we've given you just a little chart there to kind of look at. The working paper number 1526 by Philadelphia Federal Reserve in July 2015 really details the number of challenges that are faced by these young entrepreneurs, or anyone actually coming out of student loan debt. This is especially true for those in small businesses that typically focus on 1 to 4 employees as their max. And under homeownership, as we alluded to in the slide with entrepreneurship, these large purchases often result in an individual needing to get a loan, and of course those are being delayed. In terms of homeownership, the factors that play into these mortgage accessibility issues are often because of the more than 1/3 amount of their gross monthly income that's required. So you have your student loans, plus the principal for the mortgage, the interest, the taxes, and the insurance, or the PITA. And of course this then unfortunately ripples into, or this delay in ownership, homeownership, ripples into the large mortgage payments later on into retirement in some cases. When we look at overall wealth accumulation, there was a study by Robert Hilton Smith called At What Cost, which looked at how student debt reduces lifetime wealth. And the general wealth accumulation is greatly impacted by these lingering student loans because of the build-up interest, and in some case, compounding interest, which really runs into a lot of problems for young folks and starting families. The study by Hilton Smith alludes to the detrimental failure future that's faced by these students that are also greatly impacted because of coming from low-income families or students of color backgrounds. So another study you can check out is the study by the Pew Research Center that also looked at the fact that individuals with student debt has sometimes seven times net worth more than the other ones. In retirement savings, again, we use an example here to show how the loss of investment in retirement due to the inability to those with high student loans to use the time they have as a youth on their side. In our example, 15 years can really cost you $1 million. And the added saying, compounding interest is not retroactive. You really can't earn interest on money that you don't have to save. And another one that I think folks tend to not really maybe think about is it's not just the students that are taking out the loans, it's the rippled effect into society. So it isn't just the owners of these high student loans that are going to struggle throughout their young adulthood and into middle age. We're already beginning to see these effects on society. We see increases in social service needs. Companies are helping stressed families with special grants and things like that. We're noticing intergenerational dependence. Grandparents not only rehoming their children, but raising their grandchildren on the side while the parents are both income-based jobs. So we posed the question here on the slide, what will happen in the future when young adults elude the full wealth accumulation potential? I guess we'll see some more about that when we talk about our fact sheets. Now to Barbara.
Okay, so Missy, you'll continue to do my slide since I'm having some issues here. So on this slide, what I just want to introduce is just the whole way that we put this webinar together. So we've started out with the first section talking about the background on student loans and some of the issues that students are facing. This next section that I'll be presenting is I'm going to introduce you to some research that was conducted by a group of land-grant university researchers. And it just so happens that all of us who are presenting today are part of that group called NC 2172. And as some of you may have seen this morning when I sent out my email encouraging people to be on the webinar today, is that this webinar is truly the full circle of what NIFA expects us to do when we conduct research, and that is to conduct the research and then come up with some deliverables, in our case the fact sheets, that can be useful to the general public. So that'll be the third section of our webinar. Today we'll be discussing the fact sheets, and then we'll wrap up today talking about some additional resources. So on this particular slide, you've got a list of all the participating institutions. So one or more people from these various universities belong to this multi-state research group, which is called NC 2172. So in this next slide, what I'm going to do is tell you a little bit about two types of research that the NC 2172 group presented and developed. And one of the types of research was focus groups, and then the second one was an online experiment. So first, for the focus groups, some of the things that you want to think about if you want to do a virtual focus group, because typically we've thought of focus groups as being face-to-face, and you get people in a room and you have a facilitator and that sort of thing. But what if you want to get a really broad, diverse group of people, and maybe you don't have the money to fund staff or food to feed people, to encourage them to come, or any of those kinds of things? You might think about a virtual focus group. So what we found in conducting our research is that some of the pros were the reduction in costs. We didn't even have to transcribe anything because it was all done through the online course system that we used. Some of the cons, however, is that because it was virtual, you weren't in a room with people, you didn't have as much control or direction over the process that you might have had in a face-to-face situation. And you don't have the ability to kind of tease out responses from people, so they tend to be kind of short. And then, of course, you've got the technical difficulties, and in our case, we were dealing with multiple institutions. We had to deal with IRB issues as well. So on the next slide, a little bit more about the methodology that we use. There's two different ways that you can conduct focus groups. We chose to do it asynchronously, but it is possible to do a focus group synchronously. In fact, our group recently conducted some additional research using a Twitter chat as kind of the platform for obtaining feedback from people. So of course that was synchronous because it all happened within the course of a designated hour. So if you're in a synchronous mode, it's kind of like the chat room. You know, everybody is kind of responding in a window, a defined window of time, simultaneously working together. And so everything is in real time. Where in the methodology that we used, it was asynchronous. You could have somebody post a message on Tuesday and maybe somebody respond to it on Wednesday. So there wasn't that instantaneous real-time type of thing. It was similar to getting an email, where somebody sends you a question by email and you want to kind of give them a response. So people had time to think about their answers. So what we did, what our methodology was, is that we had these asynchronous online focus groups, and we had two types of samples. We used a Survey Sampling International, which is a survey research group that you can buy panels of respondents from them. So we used that as part of our sample, and then we also had 6 land-grant universities from which we recruited students to become part of the sample. And we asked demographic questions. We asked 8 pertinent questions related to their decision-making about student loans. We gave them 3 weeks to complete. So again, they had a window of time to work on this survey. And as an encouragement, we gave them $25 gift cards to Amazon if they completed all the steps of the process. So the good news is that we not only did the research, but we did what every good researcher should do and try to get it published. And it took a little bit, but we're very happy to announce that a publication that's based on the focus group research will be coming out in the next issue of the Journal of Financial Counseling and Planning. So look for that probably around the end of the year. For an intensive discussion of our focus groups. And then as far as the experimental study goes, again, we often think of experiments as being something that you're in a lab and you've got rats and people with white coats, or maybe you've got people, you know, in control groups and experimental groups, and even if they're not in the lab coats or whatever, it takes a lot of doing. But there is another way to conduct an experiment, and that's to do so online. So that's what we intended to do with the other research project. So we had half of our group working on the experiment side, half of our group working on the online focus groups. So the experiment people, if you go back just a minute, Missy, just what they were trying to do was to explore the role of information. You know, that if you provide some information about a particular scenario, will that influence the decision that a person might make about student loans and going to college? Okay, so now we can clip on. Okay, so what we did, it was the group that worked on this, was basically merging an experimental design with an online survey technique. And again, they were using a sample from Survey Sampling International, which is a firm, one of many firms that you can hire basically to get a sample to respond to a survey. So what they were looking at in their hypothetical scenarios that they posed to people online were, if you frame something as a gain versus a loss, how that affected the decision going to college, and also emotional triggers. And what we're hoping with this study, as well as the focus group study, is that the findings will be able to inform discussions about whether student loans are a good decision, and also maybe some discussions relating to how much students should borrow in order to pursue their educational goals. So one of the questions that was on the experimental study was, we just simply asked respondents to rank the reasons for attaining a college degree. So it was kind of one being the most important and then going down from there. And again, we've been looking at the data, you know, differences between men and women and different ethnic groups and everything. So just trying to get a handle on what was the primary motivation for people to consider going to college, much less taking out loans. Okay, next slide. We had different scenarios that we used, and we had a male versus a female scenario, and you can kind of look at the scenario very briefly, and you'll see that there's some information provided about recent college graduates' loan debt, and then we have this character, Jonathan, and there's some questions that get asked about Jonathan based on the information provided in the scenario. So we have 5 different groups that are subgroups of NC 2172. We've got 5 current papers that are being written. Actually, I understand that 1 has been accepted. 4 are in various stages of progress. So look for those papers to come out in the next year or so. And what we do in those papers is drill down by, you know, male versus female. So we have a gender paper. We have a paper that deals with different racial and ethnic groups. We have a paper that describes the methodology of the project and how it was conducted. So lots of different papers that will be coming out hopefully within the next year. And I believe that's the end of my slides for now.
So as Barb was saying, you know, we really wanted to give you that background of our team and show, so where did these fact sheets even come from? Did we just decide to pull this out of our hats and say, this is what we're going to, you know, create some fact sheets for extension professionals? What we really found as a theme was not just, it wasn't really lack of information, but it was, I don't know where to find the information. I don't know anything about my student loans. Those were kind of some of those themes that we found when we were working in the focus groups, especially. So we decided, well, let's make some fact sheets. Let's make them very short, because later you'll see the wonderful resources that are available from Department of Education and the Federal Student Aid Office. There are some great resources, but when you receive a 20-page packet from your financial aid office, it might be a little overwhelming. So we really wanted to make it really user-friendly and focus specifically on certain topics. So I do have a short URL at the bottom here. You can see it's just a Google URL shortener, or you can use the one that Elizabeth provided in the chat or was on the main page of, on the intro slide to this presentation. So anyway, you can get to it, or if you go to eXtension.org, you can just put in the search box student loans and it will come up. So these are the 10 fact sheets that we have developed to date. We haven't decided if at this point in time we're going to do any more, but we think we did a pretty good job of just finding the specific topics that were probably the most confusing and trying to put them in, you know, I don't want to say a more user-friendly version, but just, you know, easy, something that you could print out and hand to a client. So we will go through each and every one of these and kind of give you an overview of what we've added or what we've included in these fact sheets. And then again, please feel free to download those and use as you see fit from the website.
So our first fact sheet, and as Carrie was saying, it was really finding all the different bits of information and making sure they are cohesive across the board was challenging. I know myself looking for some of these things. This first fact sheet was written by Dr. Travis Mountain. College Savings Options, and he is currently at the Virginia Cooperative Extension. So if you want more information, you can contact him there. Just a few highlights of this fact sheet. I often get asked, what is a 529 plan? Like, where did that name come from? And it's because it was authorized by Section 529 of the Internal Revenue Code. So that's where the 529 number comes from. And those are sponsored by states, state agencies, or educational institutions. And we've broken them down into two different areas. The 529 tuition plan is paying money to an account now according to a current semester rate, or slightly higher. This seldom covers costs beyond tuition, hence the word tuition in the name. It's guaranteed or backed by the state sponsor, or the sponsor of the state. And there's often grade or age limitations for beneficiaries, or the owner or beneficiary may need to be a state resident. Now, in the 529 savings plan, you want to think of that more along the lines of like a 401k or a 403b. This qualifies covered college expenses. So this is a little different than the tuition one because there are some other areas that could be covered with this investment. It's based on the status of stocks. There are no age restrictions, no residency restrictions, but you may be limited or have limited plans, so you may need to work with the financial advisor or a broker. Another college savings option that Travis talks about on the fact sheet is Cloverdale Education Savings Accounts, or ESAs, and these can be used for private grade or high school in addition to post-secondary. So that's very interesting for folks that are looking at private school options within grade school and high school. This can be set up at most financial institutions. Unlike 529 state plans, that's a little bit different. There's a broad range of investment options with Cloverdale Education Savings Accounts, up to $2,000 permitted to be invested each year, or according to each beneficiary. Income limitations: $110,000 for single, 120 or 220,000 for joint filing status. This was as of 2016. So just a few things there. The last one, and this one I think maybe some of you also have already have looked at or shared with your colleagues, using an IRA, whether it's a Roth or a traditional IRA. But again, you need to be careful and check out those contribution times. Of course, the age for penalty withdrawals, they're very restricted in terms of some of those certain areas.
Okay, yeah, I guess this is my slide. So our second fact sheet, and again, we've tried to do these in logical progression as to when people would see student loans for the first time. So in the beginning, you're going to be all about deciding how much to borrow, what types of loans, that sort of thing. And then as we progress through the fact sheets, we get into issues like, okay, how do you pay these loans off once you've graduated or left school? So the second fact sheet, kind of in chronological order, if you will, was, okay, how do you pay for college or any kind of post-secondary education? We tried to use that term to be a little bit more inclusive. So this fact sheet goes into different ways to pay. So it talks about scholarships, talks about grants, savings, the Coverdell ESAs that Melissa was talking about, or any other savings, 529 plans, work study, whether it's officially through the college or just a job that a student might get off campus. And then, of course, student loans goes into the mix. So we kind of introduce student loans as being one of an array of options that people might choose. And of course, some people may have several things going for them. They could have a grant, but maybe the grant doesn't pay for everything. So then the student also may have a job and or student loans to kind of make up the balance. So that's what that fact sheet talks about. And then it also includes some information about other considerations that might go into the discussion about going to college and paying for school, and then all the unanticipated costs that also come into play, whether it's spending money for a student or travel costs or things of that sort. So that's fact sheet number 2. Fact sheet number 3 was one that I wrote, and by the way, I have a copy here. I didn't print it off in the orange, but they are, when they print out in color, you will have the bright eXtension colored orange, which has been their theme color since eXtension was created over a decade ago. But the fact sheets, most of them are just on two sides of the page. I believe we have 2 or 3 that have tables and charts included that run a little bit longer, but they're not long. They're a real fact sheet that people can read in a short period of time. So this is one that I wrote, and what this gets into a little bit more is, okay, drilling down again, we've gone from student loans being one of several options to pay for college. Now we're drilling down even more and just focusing in on student loans. So here it talks a little bit about private loans, federal student loans, and then the difference between student loans that are need-based and those that are not need-based. So again, just giving people more information in sequence.
Sorry.
That's all right.
Oh, I was trying to read the chat. I apologize. Okay.
Okay, so on fact sheet number 4, I looked at here when I developed this sheet was what are the easiest, quick ways for a person to look at, borrowing a loan and being responsible about it. Having been obviously a graduate student, an undergraduate student, you could tell there were times on campus whenever students were getting their refund checks, because all of a sudden expenses just started, increasing. So decision making is one of the first parts with the fact sheet number 4. So having individuals think about, shopping around, whether it's a community college, a state, or private. Making a chart to compare the fees from these different institutions and seeing, how they evaluate, or how they lay across the board. Obviously, completing your FAFSA, federal student loans, examining and evaluating loan options, whether they're federal, state, and again, private, in terms of how those affiliate with the particular universities or the institution that you're looking at. And probably one that some folks, they start thinking about it really in 7th and 8th grade is the potential career earnings. So why did you go into a particular career field choice, and how quickly can you make the money that would be greater than your expenses so you can pay more on your student loans. And then a last decision that I kind of point out on the fact sheet for, and this is one that we just started seeing recently from the FTC, is individuals before they apply for their student loans to go and check and see if they have a credit report. Your credit history, to see if someone has unauthorized a loan in your name, and if that could affect your ability for that. So the second section, before you sign your loan documents, again, a few do's and don'ts revolving around that. Having an individual look to make sure they're only borrowing the amount that they need to cover their needs and minimizing those wants in the situation. Unfortunately, we kind of live in a society that everybody wants everything, so that's sometimes difficult. Reviewing all your loans each year to see where you're at in the long run, not just on that short-term section that semester that you're taking loans out for. Keeping a file that has all your student loans and where the student loan is and who has a student loan and the terms and agreements that go with that. Often students don't think about that until they reach that final semester, and then it's panic time to search through all the boxes of papers at the university in their dorm or wherever. Making sure you update the lender with any address changes or name changes. They will find you. This we know. Ask your lender to explain the terms that you don't understand. People often are afraid to talk to their lender and have them explain it. There's no bad question except for the question that's not asked. Make sure you're not just signing the forms just to sign the forms. You really want to make sure you understand it. And of course, and they state this on the forms, that the money that you are receiving for student loans is for certain intentional purposes. So unintended purchases can often run you deeper into debt in the long run. That extra pizza that one night or the new pair of jeans, whatever it may be, was great, fun expense then, but when that interest is compounded later on, it's not so fun. And the last part, searching for jobs and preparing to graduate. Here, again, a few tips and hints, making sure that you figure out a spending plan prior to graduation, having someone think through those particular areas, corresponding with your loan lender, often to make sure that you're on track with the plan that you have. Examining those loan consolidation. Later on, you have another fact sheet where we talk about loan consolidations. Signing up for auto pay to make sure that you don't end up with a late payment. And then that adds more expense to those particular areas. And of course, now we're starting to see more tax credits that are coming out for student loan interest payments and things like that. So just a few things to check out. And again, there's, I put a link there on the bottom of this page. There are several other ones at the end of the presentation that you can check out. But there's some estimators out there to help you keep on track with your budget.
Okay, so here is one that I wrote. I wanted to do one on determining your student loan servicer and your loan balance. I do work with, as an extension specialist at my last position, I did work a lot with those students who were about ready to graduate or had already graduated. And I also had worked in financial aid, and we would have seniors come in just panicking because I have no idea who my lender is. I don't know how much I owe. How do I find these things out as I'm leaving school? So I wanted to write something that was just that. Where do you find this? So this fact sheet actually is a pretty short one, I believe, and it just shows you how to find those numbers. So for federal student loans, it's going to be different than private student loans. But for federal loans, there is a database. It's called National Student Loan Data System. And so if you hear the acronym NSLDS, this is the site that students go to find that information. It will tell them exactly when they took out the student loan, when the disbursement was made, if any of the amount was canceled or sent back. And once they click on it, it will also tell them who their loan servicer is. So who are they going to be making those payments to? Who do they contact if they have any questions? That is all right there in this system. Those students or past students, those borrowers, will actually use the same FSA ID they used to complete their FAFSA. It's the same for all the FSA systems, all the federal student aid systems. So it's really nice that it's all linked and they can get to it from there. Now, for private student loans, I have encouraged individuals to grab a copy of their credit report. I'll be honest, I've worked with people that said, I don't have private loans. We've pulled their credit report and we found that they took out private loans. Or no, I have a loan through this bank and this bank only. I took it out one semester, and they come to find out, oh, they took out a private student loan 3 different semesters and used 3 different lenders. So it's really important at that point in time to say, you know what, let's just grab your credit report just to make sure they have we have all the information we need. Because sometimes when an individual starts a job, they may not be making enough to, let's say, make a huge payment on both their private student loans and their federal student loans. So we may look at options to say, you know what, you qualify for income-based repayment on your federal student loans. Let's do that, and let's put a bigger chunk on your private student loans every month, because the interest rates are higher. So we always want to look at those different scenarios and see first of all, what is the borrower's main goal? Is it to pay off their loans faster, to reduce interest, or to reduce payments at this point in time because they're not making enough money to cover all their payments? And then we go forward as financial people and help them work through those steps and say, you know what, this is a good plan. You know, this is going to help you pay those off sooner, or this is going to help you lower your payments until you do find a higher paying job. Okay, and then we have choosing a federal student loan repayment plan. So I kind of alluded to that a little bit in the last fact sheet. As you can see, we kind of build on these. So this one was written by David Evans at Purdue. And we really wanted to show you, again, those different repayment plans. So as you saw at the beginning of the presentation, I showed you kind of a quick and dirty chart of each of these. This fact sheet really goes into each of these repayment plans and kind of gives you an idea of what, you know, if your scenario is, you know, you get out of college, you get a great job right away, what is the best repayment plan for you? And we, you know, do go through each of them and give you a better idea of what each of them means and who qualifies for certain plans. For instance, the pay-as-you-earn, not all borrowers can qualify for that because you have to have had a student loan disbursement within a certain period. But the revised pay-as-you-earn, of course, then we might be able to get those those borrowers too.
Okay, so for the 7th fact sheet, I'm going to start out by posing, the question, to consolidate or to not to consolidate, what exactly, where do we start this conversation? So I posed a few questions on the fact sheet. Do you have multiple loans to track and to pay? Is your current pay schedule, leading you towards default? Do any of your loans have forgiveness options? Do you have variable rates that could cause you to pay more over a period of time? Or even, do you have limited options for repayment? So looking at these different things, weighing the pros and cons of that situation, that may push you towards loan consolidation. Then I outline 6 steps in terms of federal loans. And those 6 steps, first you obviously want to go and gather all the information you have about the loans. You want to review your budget. You're going to look for online, again, it's through the online system there, a direct consolidation loan. It's only available through, the federal site. Choose the loans and consolidate. And you do have the option to select the loan servicer, which is something that a lot of individuals don't realize at the time. I think it's because there's a lot of stuff. I know myself looking at the options online, there's a lot of different things there, and you somewhat feel pressed time-wise, especially when you're doing that at the end of a semester. You obviously want to make sure you review the terms and conditions. And the last step, of course, is to make sure you read all the correspondence from the loan company. And it's not the most exciting read, but it's really important to make sure you understand that contract that you are now making with that loan company and the loan servicer, the options you have at that present time throughout the loan, and of course at the conclusion of the loan. So looking at all these different things are what you've outlined in that loan forgiveness. And again, the student aid page really has a lot of different things that you can look through, and a lot of different types of forgiveness options that maybe due to the certain situation that the individual is in, they qualify for, but maybe not necessarily would have heard of.
Okay, fact sheet number 8, recovering from student loan default. Again, this is another one that I wrote. I've worked with individuals who have been in default, and some know it and some don't. But it is something that we do need to discuss, because it's, as we showed before, there are individuals who are in default. So are there things that we could do as educators to provide them with the information on how do you get out of default if you have already defaulted on your student loans? So the beginning of this fact sheet just does talk about some consequences. How many days late do you have to be to go into default? What it does to your credit, and those types of things. Ways to avoid default. So if you have missed payments and you're afraid you're going to go into default, do you qualify for a deferment, or do you qualify for a forbearance, where you can stop making payments for a period of time and not go into default. So we talk about that. Now, if there's a situation and it's unfortunate that an individual does go into default on their federal student loans. Now, again, a lot of these we do focus on federal because there are really nice clear-cut rules for these things. So you will see in the fact sheets where if it is for a private loan, it will specifically say that, but most of this is federal. But it does talk about if you've gone into default, how can you get out? So you can either just pay off the entire amount, so repay the loan. If you're in default, that's probably not going to happen. So there is loan rehabilitation, so making so many on-time payments to the servicer, and that will get you out of default. Or, I see a typo on my part, sorry about that, but loan consolidation. So under certain circumstances, if you consolidate and do an income-based repayment, it will actually remove your default status. So I've helped individuals where we've got them out of default by consolidating their student loans. They chose, we put in their tax information, we linked to the IRS, their payment was $5. They could afford that. So they're no longer in default, or sometimes it may be $0 if they don't have a job or their income is low enough. It will get them out of default, and it will clear up that part on their credit history, and it helps them as well to be current on a bill as well. So.
Okay, and then this next fact sheet was the second one that I wrote, and it's a two-pager, and it kind of covers some of the same things that Missy talked about on the beginning of this webinar. So some of the later life impacts, and again, we're kind of chronologically now talking about things after the student loan process. You know, once people are graduating, they have all these debts that they have to pay. So the first part of the fact sheet kind of covers all the impacts that Missy mentioned before. The effect of having student loan debt on home ownership, on entrepreneurship, on net worth and wealth accumulation, retirement savings, the ability to live independently, not have to move back to your parents' basement, live there when you're 30, and impacts on society. For example, if young adults continue to live in their parents' basement, that obviously reduces the pool of home buyers who can buy the houses of people who are much older that maybe want to move and downsize in retirement. So it affects everyone. And then the second part of the fact sheet has 10 strategies to repay student loan debt quickly. So it kind of gives some ideas, you know, making biweekly payments, earning extra income, requesting cash gifts, you know, so people can give you money at Christmas time to help pay your student loans, trying to get loan discounts, possibly considering refinancing. There's just 10 different options that people can look at that might help them accelerate their debt repayment.
Okay, and the last fact sheet was also written by David Evans. We wanted to, so the last probably 5-6 years, there's been a ton of changes. You hear a lot about it in the news, and we really wanted to focus one on just what has been some, we call it recent legislation. So these changes that really affect the student loan borrower. So I talked a little bit about the new repayment plan, the revised pay-as-you-earn. That was something that came out of recent legislation. Servicer changes, and that goes to, you know, they can do robocalls, those types of things. Perkins loans changes, that, you know, trying to reduce that program, get rid of it, and make it just more direct. Subsidized loans for graduate students. Graduate students now can only take unsubsidized direct loans. So that was a big change that really affected those students. And if you don't know the difference between subsidized, that's where the government does pay your interest while you're in school and during any grace period or deferment period. Unsubsidized is where the interest starts accruing upon disbursement. So that does make a big change. Loan forgiveness options. So the big one here is the public service loan forgiveness. So anybody who works in the public sector, and if you go in, you know, if you go to the FSA website, it gives you a really good idea of who would qualify for this. But basically after 120 on-time payments, so 10 years, those loans are forgiven, any federal loans under certain, you know, those repayment plans. And you don't have to pay tax on the amount forgiven. So if you're under the public service loan forgiveness. Program integrity and improvement, that was another thing that came through legislation. And one I just heard about, I did not realize it came in 2015, was for home buyers if they're on an income-based repayment plan. Just that how the lender calculates income to debt ratio, they no longer, this is for certain loan programs, so like FHA, but they will actually use 1% of the outstanding balance of student loans. They calculate that as your monthly payment and not your actual payment. So that was a big one that might affect student loan borrowers who are trying to purchase a home. So if you work with any of those individuals, that may be something to point out to them as well. So even though they may, let's say under income-based repayment, pay $100 a month, if they owe $75,000, it'll be calculated as $750 a month in their income to debt ratio.
Okay, and then this last final section we're going to kind of breeze through quickly because it's just basically screenshots of various resources. So we don't pretend to have the only good resource on student loans. There's a lot of good things out there that you could use as financial educators when you're doing programs about student loans. So if you're interested in videos, this is a great one from College Board. It's called 5 Ways Ed Pays, and it just talks about some of the benefits that people get when they have post-secondary education. And this is important because, you know, a lot of people have been questioning, is it really still worth it to go to college? So it makes the case that there are many benefits to education, some that you might not even think about. They're not just all jobs. They have to do with a lot of other things, as you can see on the slide. Okay, the next one is if you want a very serious video. This is called Voices of Debt, and it just basically, as the name implies, has people who have loans talking about the debt and the impact that that debt has on their lives. If you want to go the other way and have a humorous video, here is another one that kind of equates student loans to a sexually transmitted disease, if you will. So again, just coming at student loans from a different way. If you really have a little bit of time and you want to delve into this topic, there's a documentary film called Broke, Busted, and Disgusted. And again, it kind of focuses in on the whole problem, but it also portrays people who are dealing with paying off their student loan debt. The student loan calculator is a great resource. We found in our focus group research that students had a very poor conception of how the amount that they borrowed translated into what amount of monthly payment. So this is a great tool to try to make that connection for people. So if as soon as they know what they borrowed, they can go put it into the calculator and translate it into a payment. This is the student loan calculator, just another one that can be useful to help students figure out what they need to pay and how much they owe as balance. If you haven't seen the student loan debt clock, it's very much like the national debt clock that's in Lower Manhattan, except it's an online student loan debt clock. So you click on that link and it's constantly flickering and changing. Actually, the last time that I checked it, it was we're approaching 1.4 trillion. It was like 1.38 when I checked it about a week ago. And then several people have alluded to federal student aid, which of course is part of the U.S. Department of Education, and they've got a very robust website that talks about all of the different issues that are pictured on the slide there, again, kind of start to finish like we've done with the fact sheets. So everything from preparing to college to paying off loans once you've graduated. And then on the federal student aid website, they've got the repayment estimator, again, trying to give people some direction as to how much they're going to owe on the amount that they borrowed. And there's student loan glossary. So there's a lot of terms that, you know, even we've thrown out today, subsidized, unsubsidized, and all those various types of terms. So federal student aid has a good glossary as well. And then CFPB has done a lot of work in this area, so they've got a whole section of their website that is devoted to student loans, and you can see some of the titles there of the different sections. And of course, one issue that they get involved with is when students have complaints either against the lender or the loan servicer. They'll make a complaint to the CFPB. And I think we're back to Elizabeth. Or
yes, no, I think it's me. And I want to thank the panelists for the presentation. And we did have a few questions. So I'll start with the most recent from an anonymous viewer who asked, was this webinar recorded and where can I go to watch it again? And the answer is yes, the webinar was recorded and is still being recorded actually. And it will be, the link to the recording will be off of the learn.extension.org page for this event. And we'll send it out.
Chat now. Well, I put that in chat, but then you can follow the email if you like.
Thanks, Mark.
Sure.
And then we did have a couple other questions, well, actually 3 that have been asked and I think answered. So one, Barb Wallen from Iowa asked about tax credits related to student loan repayment. And 2 examples that Barbara O'Neill gave were Lifetime Learning Credit and American Opportunity Tax Credit. Melissa also mentioned that Travis could probably provide a response, a more detailed response, since he was the author of that fact sheet. But it's the lifetime learning credit and the American Opportunity Credit. So that's one response. And then Barb, if I think then you were asking about lifetime learning, and so does that apply to student loan repayment? So I would ask any of the panelists if, and Missy email indicated that she had a typo, but any of the panelists, do you want to respond to that question too?
This is Barb. The only thing I would add is I just whipped out my handy dandy, annual limits relating to financial planning, which is kind of, I call this the Bible because it's got all the numbers. So just a reminder that for both of those credits, there are phase outs, income phase outs. So they wouldn't be available to everyone, but the lifetime learning credit here, it's saying 20% of qualified expenses up to $10,000, but then there's limits for single and married filing jointly. And then American Opportunity Tax Credit is a maximum of $2,500, and it too has phase-out income ranges for singles and married filing jointly.
Great, thank you. And I don't know, Barb Wolin, if that doesn't answer your question, feel free to type again, type some more. And then Kay Poff, I think that's Karen Poff, right? Asked about the impact of a spouse's income on student loan payments. And Missy answered that it depends on the type of repayment plan. So again, I open this up to any of the other panelists if they want to respond to that live.
I can take that one. So your spouse's income, it depends also if you file jointly or separately on your taxes. For most repayment plans, except the pay-as-you-earn or the revised pay-as-you-earn, if you file separately, you do not use your spouse's income. If you file jointly, yes, you do. For the revised pay-as-you-earn, however, that was something that was a newer thing where even if you file separately from your spouse, if you're doing income-based repayment plan, yes, they will use your spouse's income to calculate your repayment amount. Hopefully that's clear as mud and answers as much as possible. So again, as Missy alluded to, it does depend, but I always say double check before you make any decisions. And once you're going through the studentloans.gov website, they will tell you if you need your spouse's income as well when you're choosing your repayment plan.
Good to know. They know that, huh?
Say you're married, they'll ask if you filed together or separate. So,
okay. Well, it looks like we are at 12:29 in Manhattan, Kansas, anyway. So 1:29 in the Eastern time zone. If there are any other questions, looks like one more question came in from Harriet Shackley. One long-term concern for families with student loan debt would be their ability to save to send their own children to college. Any comments? Carrie shaking her head.
Well, this is Barb. I mean, it's true. It can kind of become a problem that goes from generation to generation. But I would just reiterate the one thing that financial planners always say to people is that if push comes to shove and you're a parent and you have a limited amount of money and you can only fund one financial goal, saving for your own retirement will take priority over saving for your child's college. As harsh as that might seem, the reality is that nobody gives loans for retirement, but there are students.
That's right.
I was going to allude to the same thing. Thanks, Barb.
Okay, well, I think we'll go ahead and wrap up. Thanks, everyone, for joining us for our August Financial Security for All community webinar, and we'll look forward to seeing you in September.
Thanks, everyone. Bye-bye.
Bye-bye.